Everyone discusses Friday's US jobs. I'll ask you about that as well. But this Friday, it's Chinese inflation.
Yeah.
Now, 6.2% is the forecast. July was 6.5%.
Yeah.
They're saying the inflation's peaked in the summer.
Yeah.
What do you think?
We agree that it's most likely peaked. We're looking at a print of 6.1 ourselves, and we think it should decline through the end of the year and hopefully finish in the 4% range as commodity prices ease and due to base effects.
What about, Stephen, the other impact of the US jobs and what's happening in Europe feeding into this Chinese equation?
Yeah, well, I mean, it's having a really negative impact, as you pointed out, on markets today because of the prospects for exports. But domestic demand is still quite strong in China, and we think it's leading to a healthy moderation trend, a soft landing scenario, if you will, that should help ease inflation pressure as well.
You've got a headline in your research, inflation does pose a policy dilemma.
Yeah, absolutely. I think the biggest, most stark dilemma this week is for the Bank of Korea, because inflation came out at 5.3% in August, way above expectations, way above their inflation target, and they see slowing growth going ahead. So what have they got to do to kind of keep inflation expectations in check? We think they're going to stay on hold, but it's a tough call for them right now.
And also within that, as they raise the reserve ratio requirement on the recent, of course, liquidity squeeze, the small, medium-sized enterprises, they're being strangled because the money is going towards the bigger companies. So that could be a problem for China.
For China, that is a problem, and I think what they need to do is keep the monetary stance tight to keep inflation under control, and use targeted fiscal measures to help those kinds of SMEs. And I think that's a trend we might see across the region during the remainder of the year, kind of keeping a tight rein on monetary policy, maybe not tightening too much further, but using targeted fiscal measures to help out certain sectors of the economy.
Indonesia and Taiwanese inflation today. We've got Philippines tomorrow. China, of course, you mentioned on Friday. Which of these countries in Asia worries you the most as regards how they're dealing with the growth concerns, and which one is in the best shape?
I think Korea, as I mentioned, it poses the biggest dilemma right now because they're a very export-oriented economy, and they're going to feel the impact of that slow jobs data in the U.S. Indonesia's got a lot of domestic demand and is relatively resilient, so I'm not too worried. And fortunately, their inflation seems in check right now, so they can probably get away with keeping interest rates on hold for some time.
And Thailand, many are saying post-election they're in good shape going forward. It's more clear.
Yeah, well, their growth is slowing there, too. Inflation for August came out higher than expected there. They had the guts, and the Bank of Thailand actually raised rates in the midst of all this market turmoil, and that really, I think, caught the market, although it was expected. But it does show that some central banks are alert to inflationary risk. But Thailand appears posed to continue growing during the remainder of the year now that the elections are over.
I want to spin it forward if I can. Everyone's talking about maybe quantitative easing 3, but also actually more realistic what they call, I believe, the Operation Twist. PIMCO, Goldman Sachs and RBC raising the average maturity of bond portfolio, selling short-term debt into the longer-term version.
Yeah.
What impact, Stephen, would that have on the Chinese inflation story and indeed Asia?
Well, I think the prospect of sustained low interest rates in the U.S. and possibly QE3, which isn't in our baseline, but if the downturn in the U.S. is more pronounced, we think that is a possibility, or Operation Twist, as you put it. That would bode well probably for Asian currencies, because with the region still growing relatively higher than the rest of the world, and given the yield differential, it's likely to mean capital flowing into the region, barring...
That's positive then.
That's a positive for currencies and for the region, but it'll pose a dilemma, again, for capital inflows, reserve accumulation. So that whole scenario that we saw earlier this year may set up again as we go forward. But it's positive for currencies and probably for the region going forward.
We'll leave with a positive thought as it's a Monday in the market.
Why not?
Stephen Schwartz,
thank you very much.